Okay, perfect. Well, happy Friday and welcome to the live stream. I hope everybody had a great week. Um, it's not been easy. It's not been easy. Why? Because price keeps making new all-time highs. And when price keeps making new all-time highs, trying to short, if you're a reversal trader like me, trying to short is like trying to pick up pennies in front of a freight train. It's just not worth it. So I've had to adapt. I talked a while ago about continuation IFVGs, and I was trying to figure out the best way to go about it. Because before, when I was trying to trade them, they just kept losing. I'm like, I don't know which one works, like why which one works and why which one doesn't. So I went back to the drawing board, started learning more, just more ways to help. And I think I've finally figured something out. Just from studying other traders. I've never hidden this, but I didn't create any of these things, right? Like, I'm studying and learning and practicing and executing, just like any one of you guys. But shout out to some awesome traders that trade with IFVGs. Tempo Trades is one of them. A lot of things unlocked for me once I started studying everything he's got going on. I know obviously he has his own Discord server and whatnot, but I think he just came out with a brand new course, 2.0, 20 videos. It's free. If you want to join premium, use my link. The affiliate link's there. I've been part of his premium side for a while now, but I think I'm at a point now where I might exit, just because what I've noticed is a lot of trades that he would take, I'm also taking. But I will say there's a lot of trades he takes that I don't take because I don't, that's not how I would take a continuation trade, for example. And today we're going to talk about how I'm taking continuation trades. And I picked up some tricks from other traders. There's a trader, his name is Colin Jones. I totally forgot that he uses the stat map in a very unique way. And I had met him last year, actually, and he's part of the 2 Degrees fam and all that kind of stuff. But I noticed he posted a video about the stat map, and it just reminded me, and I thought, oh my God, this is the perfect tool to use to get me on the right side of the trend. So I've just been literally doubling down on this. And the other thing that's really interesting was there's a lot of concepts or mechanics that I was using, right? Like hard time frame, IRLs, and basically aligning SMT with that gap, right? Because when we're trading continuation trades, and I'll just show it to you like this. We'll move into this, but like when you're trading continuation trades, what ends up happening is there's no liquidity to be swept. So even if you're trying to go long and you're like, oh, well, I'll wait for like a higher time frame liquidity sweep. So like if I'm looking for an hourly higher time frame liquidity sweep, guess what? Like this is the hourly right now. Do you see any? There's none. None exist. You have to use a gap. So this is why I was using gaps, and then of course aligning SMT with it to just add a little bit more confluence and context to the trade. And as we know, when there's SMT, it's a Kraken correlation, right? But lo and behold, I started noticing a lot of those mechanics are kind of how Colin trades, and he does things a little bit differently, just like how Tempo does things a little bit differently. Because no one's gonna ever trade exactly like the people we learn from, right? Like even Matt, how he showcases a unicorn. Like even all the years I study with Matt since 2024, I never could trade the unicorn the way he trades it. It's just how it is. And you will probably never trade the IFVG exactly like how I trade it, because you are unique and you think differently than me. And sure, our setups might be very, very similar, but there's a lot of logic and other things that might not be exact. Now, I will say the beauty with the IFVG is it's pretty obvious when the IFVG is presented itself, but I think there's nuances involved, like whether to use a 1 minute, 2 minute, 3 minute FVG, for example, to form that IFVG. And then also just knowing the size, right? Like, does the size of that IFVG work for you or not? A lot of times from learning with Tempo, it's like I know he uses a lot of like double digit sized IFVGs, I think around like 8 to 20 points with NQ, whereas I'm using like 5 points, maybe sometimes even 4.75. So you see what I mean, right? Like there's always going to be variance in how you do things. It might be similar, but so it's not going to be identical, but it's going to rhyme, right? So anyways, Trici says, I've been using StatMap and trying to build an edge with it. Yeah, hopefully I can show you something that will allow you to, just put some more pieces together. And, one of the things I always talk about is just, I'm just trying to plant seeds and, see where those trees will grow, right? I just want to put ideas out for everybody and maybe something sticks and that you take it or like it unlocks something for you. Like that's to me the biggest win. So anyways, let's go to the memo. And here's our agenda for today. I think the first thing we'll talk about is the data short from this morning and that play. Once again, a data candle setup is something I picked up off of Tempo. Credit to him once again, because I think it's quite remarkable, that setup. I really don't like trading pre-market. I got burnt 2 days ago with pre-market trades. And I followed my plan. It's just, it didn't work out. So I've been trying to tell myself, don't take any more pre-market trades. Just stick to 9:30 to 11 when it comes to the reversal idea. Or even just taking moves off of the daily EQ, which is what I did that day. And then I ended up taking 2 losses. So locked myself out. And that's actually another important thing to talk about. It's like I took those 2 losses and I was talking to another trader. You guys probably know him, Iman. Because he was asking me, how'd it go? And I'm like, you know what, man, I had a pretty shitty day because I took 2 losses. But I'm like, I locked my account because I could feel the FOMO like trying to kick me into taking stupid trades like that are not part of my model. Like anything, just like jumping into weird scalps and things like that. I could feel that urge. But thankfully, Tradeovate has the lockout feature. And I was just going to say, use that lockout feature for yourself, however that makes sense, because, we are our own worst enemy, right, in this game. The market's not going to be the reason we lose most of the time. It's going to be the decisions we make and the rules we break and things like that. So let's talk about the data candle setup first. And let me just put this up here on the screen. And I have some alerts set. I'm just looking at hourly stuff, but let's take a look at the data candle. So this morning, this is what we have, right? This is our economic calendar. 8:30 a.m. We got NFP. NFP has been a very, very important red folder, and this is a double red folder because there's also the unemployment rate, which I don't know how much actually moves the market. And then, of course, we had President Trump speaking at 12, which is irrelevant because all the trades were pretty much done before that, right? We don't want to be trading while he's talking, for example, right? But yeah, let's go to the news, and let's go to 8:30. You just hit replay. And at any point with anything I'm saying, if I'm going to try to go a little bit quickly here, but like if there's questions that you have, just honestly drop it in the chat, and that way it's there, and then I can kind of go back to it and answer things and just like, I want to make sure everyone's on the same page. So news drops at 8:30. What does that candle look like? So look at the way all these other candles look, right? And I'm going to show you where the NFP candle is. The NFP candle is right here. Here's your data high. And here's your data low. That's it. Which is crazy to think about because normally when we have NFP or CPI and things like that, we're expecting like 80 to 100 point type candlesticks, right? Today, this candlestick was literally 45 points. Peanuts. Super, super small. And if you'll recall, I don't know where it is, but Matt had actually mentioned in a tweet and in a post, and he said, red folders are no longer like what they used to be. Nowadays, it's more about following financial juice, right? This is the stuff that's moving the market. This war, right? Like take this for example right here. Iran says at 9:22, the U.S. proposal to end the war is under review. Why do you think the market's so bullish? Everyone thinks the war is gonna, like I say everyone, but the market is moving like the war is gonna be over. until, we get information saying something completely opposite. Because last night they were saying U.S. ships are getting blown up and the U.S. is dropping bombs in Tehran and stuff like that. So it's like, what are we believing? But nonetheless, I digress. Here is the data candle. Let's look at the setup. It was a super, 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 super simple setup, okay? There's literally nothing to this, okay? Any one of you can do this. The key is just trying to understand momentum, because that's where things get subjective. Like understanding momentum, understanding, strength, right? Like a strong move or strong reaction. So basically this morning, 8:30, we get the candle. It's nothing like what we like, but price keeps moving higher. And then you can see right here, this is previous daily high. So previous daily high gets swept, and we've also started to sweep the data high. So at this point, all you got to do is start looking for IFVGs to form on the way down, because ideally what happens with these types of setups is that each side becomes a drawn liquidity. So if the swing high gets swept first, we're looking for a move to the swing low, which is the data low. And that's all I was doing. I was literally just waiting for price to pick a side and then move to the opposite side. Okay, that was literally the trade. Now that's the general concept of this thing. When we're trying to put the IFVG into play, though, you'll notice there's a lot of movement here, right? There's a lot of movement. So which IFVG do we use? For me, I decided that I was going to use this one because it's the highest one. Also because given the way price is moving up here, and if we turn on SMT for a sec, I think there was SMT there. Yeah, there was. So seeing that there's SMT here with ES, I want to try to use a higher IFVG that's closer to the swing point. And you'll notice down here, there's also another FVG here, right? So you'll often hear me say, is the setup singular or is it non-singular, right? Now, given this trade, this was the risk, right? Like this is the risk you got to take. This is where things get subjective. Now, in my opinion, because this candlestick was right here and it separated the FVG, right? So it's not like it was a stacked or a series styled IFVG. There is some distance here. So depending on how you take a trade like this, and this is basis on your stop loss, right? So you could set your stop loss to break even post entry, but it all depends on how you want to play this. So literally waited for this candle to close. Entry is literally a market order here. So you're basically entering on that candlestick. And the thing with this is I personally, Alice, what's up, brother? I personally used a swing high, the protected high as my stop loss, because I just, the volatility, I just didn't want to get wicked out unnecessarily. And I wanted to give the trade some room to breathe. Also, because I'm going for 1R. Wait, that's the wrong way. Short. There we go. Also, because I typically just go for 1R. Like 1R would be about here, right? So I thought, does price have enough momentum to carry me through? What I didn't want to have happen is this being 1R, right? Like if my stop loss was like, let's just say it was like my entry was way lower. What I didn't want to have is something like this, because I didn't want to bank on just taking profit solely on, like, this is when I set the whole thing up. I didn't want to base my mindset on taking profit exactly the data EQ. I thought maybe I'll just take it at 1R. However, once the trade started to play out, and I'll show you this. Right here, here's the entry. Price moves into the FVG. Look at the reaction, right? This is the problem when you have FVGs lined up in front of your trade, right? As in terms of the direction of where you want it to go. Because at any point, price could have easily gone from here and just went straight up, right? Because that is technically a drawn liquidity. It could happen, right? So when price moved into this FVG, I decided to move my stop loss to break even. Okay, and what's really crazy about this is we got a very, very big pullback, larger than I would have wanted. And right here you can see price like nearly took me out break even. Okay, nearly took me out break even. But that's the whole point of not getting scared of the trade, right? Now, depending on where your entry was on this candlestick, this might have taken you out. So this is why often when I take a trade like this, like let's just say my entry was, let's say my entry was around here. Let's just say I got a bad fill, okay? Let me move it down a little bit more. Okay, so let's just say I got a bad fill. So when you look at this and think, okay, I'm going to move my stop loss to break even because we're already at the FVG here, you would get taken out. What I would say to you is this. Don't use your entry as the break even level, okay? Use the actual candle that closed below the FVG as your break even. Okay, now of course that means if price were to have tagged this, you would have been out with a little bit of a loss, but that's okay because you remember, you're trying to keep yourself safe. You need to have a good defense here, right? We know what the offense is. The offense is super powered, but we got to make sure we have a good defense. Don't use your shitty entry if you got a bad fill as your break even, because you're not working with market structure now. You're working with your entry, and you can't judge it or base it off of that merit. Use the merit of the chart. If this was the candlestick that confirmed the IFVG, and let me just put my little IFVG little tag there. If this is the candlestick that confirmed the IFVG, then that is technically the candlestick you want to use as your break even. So for me, I kept my stop loss literally right at that level. And truth be told, it saved me from having a stop loss, hit at break even. Because imagine this happening where you get taken out break even, and then the follow through happens. It's the worst feeling. So I would rather risk a few points and be wrong and lose, like I said, a few points than get taken out of the trade prematurely when I full well know this trade typically will sweep one end and go to the other. Okay, so that was the setup. That was literally it. That's all I looked for. You just have to put confluences together. Was there a higher time frame liquidity? Yes, there was previous daily high. Perfect. We know the data high is a liquidity level in itself. It got swept. Now, I say swept, but this doesn't really mean sweep. But price literally moved above it first, so we're targeting the low now, right? Finance says, very true. I know some people that got stopped at break even on that trade because of that. Yeah, a lot of people will get stopped out. And I think it just comes with some sort of intuition and practice, because like I've traded many of these types of plays, and I've been burnt like this. And even if I'm taking an actual IFVG trade, it's no different, right? Like even if it was a 9:30 to 11 o'clock FVG trade where an H1 level got swept and I took it, and my entry wasn't as good because maybe I chased, but I could have had a better entry if I just waited. You just never know, right? I'd still use the confirming candle and just sacrifice a couple of points, and just at least put myself in a position where I have a chance. Okay, so the other thing to talk about is the discrepancy. Okay, what do I mean? Well, there was a huge discrepancy, and Mika actually pointed this out, so shout out to Mika. Let me put it up on the chart here, show you what I mean. So NQ, move all this stuff. So this is the data candle on MNQ. Here's our data high. Here's our data low. Do you see the discrepancy? Data low. There we are. You see the discrepancy between the two? Now, this is another important thing to talk about. While most of us are executing trades on MNQ or some sort of a micro contract on another asset, doesn't matter. In my opinion, you should always be charting and basing your decisions per the mini contract. So I do all my charting on NQ, and majority of the time I'm executing on MNQ. So today I was executing on MNQ because I didn't want to risk like $600, $700. I wanted to risk like a couple $100. So when I took the trade, and I'll just show it to you like this, right? So here's the same setup. So the candle that I entered on, it was the same confirming candle, which is perfect. I'm still basing my decision off of NQ. So even if this closed inside of the gap, but NQ didn't, I'm going to take a market order entry no matter what, because I'm trading off of NQ, not MNQ in terms of the chart. Now, so the entry's set. We have our FVG right here. Same FVG, okay? Same story, right? Stop loss doesn't get hit because my entry is going to be based off the confirming candle. So I'm looking at this candle right here on the left, not the one on the right. Okay, the next thing is, where am I taking my profit? So I had mentioned how I was going to take profit at 1R, right? So let's just say my entry was here. Now, in my thread, I'm marking off all of these levels for people so that, you can decide what you want to do. And I had mentioned that in my thread. I said, I basically just pointed out like, hey, we hit 1R, right? But I never said I closed the trade. I never showed my executions. I just said, hey, we're at 1R. It's up to you to decide what you want to do, right? You can't just follow me. And I think Mika also mentioned this too. Like, even though I have the alerts and stuff like that now, which is helpful, of course, I think, by no means you guys should be following me like a signal bot, because I screw up just as much as the next person, and I don't want to see you screw up. What I would rather do is share the information. I post like crazy, so there's so much, like the volume of stuff I post in that thread is all there. I think it's good stuff because it's stuff that's in my head that I want to get out. But looking at this setup, I thought, you know what, I'm gonna wait. My stop loss is set to break even, so either this trade's gonna be a break even trade, or this trade's gonna be a winner, and it's gonna be more than +1. Now, I base my decision to take profit not based off this level. I based it off of this level. So the second price moved into the data low right about here, let me show you the correlating candle, right? It's right here. Do you see on the right? It's this candlestick right here. This is where I took TP. This went further, of course, but this is the thing when you're trading. And I had mentioned this. Let's go to what I'm talking about. If you go to Trading IQ, I posted this. Did I follow my setup rules? Did I manage risk correctly? Did I exit according to my plan? So if I ask myself those 3 questions and go back to this trade, did I follow my setup rules? I sure did. I entered when I got that confirmation per NQ. Did I manage my risk correctly? I did. I didn't risk $800 or $700 or $600 on the NQ contract. I risked a couple $100 on the MNQ contract. And did I manage my risk correctly? Yes. I moved my stop loss to break even the second the FVG starts getting tagged down here. And I used the applicable candle that confirmed the IFVG. And I don't mean to be repetitive, but I often find saying things a few times over and over again or coming back to things helps people to remember some of things things. And then number 3, did I exit according to my plan? This right here to me is one of the most important things to keep in mind, because if you do not exit according to your plan, you're now acting on FOMO. You're acting on panic potentially. And this happens to all of us. We all feel that, okay? 100% we all feel that. My plan from the start was, if one side sweeps like the high, then my plan is to take profit at the low. What's up, Iman? What's up, Iman? And that's off the NQ chart, not off of the MNQ chart. Xanu says, bro, I had to close today, trading view. What happened to you, my friend? I think you had a loss, right? If I'm not mistaken. Sorry, I don't mean to digress. So yeah, did I stick to my plan? Did I take profit where I said I was? Yes. I did. And guess what? That trade ended up working out to being a little bit over 1.4R based off of my entry, right? It says 1.48 here, but I think it was more like 1.43 for me. That's better than 1R. And I stuck to my guts. I stuck to my plan, and I just like had the conviction. And I think this is another thing with trading is like you have to have conviction as a trader in the setup that you take. If the criteria is, whatever it's supposed to be, okay? Sanders says, I lost so many entries that I was close to opening a trade just for oh man, yeah. So that's that FOMO I was talking about, right? Remember I was saying to you about how a couple days ago I took 2 losses in a row, and I locked my account on Tradeovate because I don't want to have that FOMO, right? We all experience this. This is so real, and it's good that you're able to mention that too. Good for you because it takes courage to admit when you lose. It takes courage to admit when you have weakness in what you're doing, because if you're not truthful about it, I mean at the very least be truthful to yourself, right? Go to your journal and be truthful. But to say something like that in a general way, like publicly like this, it takes a lot of courage and a lot of guts to do that. And I really think by doing that you are obviously going to put yourself in a better position, because self-realization is such a big deal in this thing. The sooner we're able to realize the things we do that are not helping us in this game, the faster you're going to accelerate into profitable trading and what disciplined trading looks like. Take Matt, for instance, right? Matt is like the OG GOAT of disciplined trading. I have never seen someone more disciplined than that guy, and that's why he's my mentor. He mentors all of us for sure. But I'll just speak for myself. I've been following him since April of 2024, when he was still known as Ash Ketchum, actually. I have the PDF that says it. And he was literally just trading unicorns. And I learned all about ICT, my foundation, and my course through him. But the discipline he has is unmatched. I mean, to me, he just does not take any crazy risks. And even when he feels that he's done that, he shuts the whole thing down and stops trading. Sometimes he stops trading for the whole week. Like, he takes it that serious. And I've seen him do that. So it's important to understand what that looks like. Steve says, this trade was also a unicorn, but it did not agree with my higher time frame bullish bias. Sanders says, bro, I'm learning and need to learn a lot. Never trying to be a pro. I recognize my errors and share them because I know people feel the same. And sometimes they think that it's only them. Exactly, man. And that's the beauty of this community. This is why I'm doing live streams in here on the public side, not on the premium side anymore, because exactly for that reason. I think there's a lot of people that are trying to get to pay out, or even if they're just trying to learn, just some basics, or even just to learn a model and what that looks like to trade. That's why I'm live streaming. I want to hit those people, And then once you're able to achieve success, then, I mean, for me, that's like mission accomplished. You know what I'm saying? That's mission accomplished. That's the whole goal of this for me. I get all satisfaction in that alone. Just seeing people grow, seeing people succeed, and then start seeing them take payouts. And I'm like, wow. Big bro, yeah, I'm pretty old. I'm pretty old. Probably compared to most people here. Okay, so any questions about the data setup? I know I ranted a little bit too long on that. We're going to get to the next topic, which is, I know I have market review here, but let's do the continuation IFVG model, because that was the core of what I wanted to talk about, and we might just skip the review. Oh, Xanu, you're all good, man. I like to poke fun at myself. It's all good. Okay, so the continuation IFVG model. How do we go about doing this? How do we determine what we're doing? The very first step when it comes to this model, and let me just set my screen properly. Wow, market is hella bullish. Holy crap. Okay. me just set this up properly. So the primary function that I've added to this is the stat map. Okay, so stat map is a 2 degrees indicator. If you want to sub to it, I have it here. There's an affiliate link you can use. And I'll also just drop this gem to you guys. I'm going to be working with 2 degrees. I've been working with them all the time, but I think we're going to try to do some sort of a giveaway. I just don't know when. So a giveaway is going to come in terms of the indicators. I'm not sure what that will look like exactly, but I'm just letting you guys know that is coming. So let's go back to the stat map. How do we use the stat map? The way I use the stat map is very, very simple. Okay? Super, super simple. When I'm looking at this thing, I'm looking at... Let me make this a little bit bigger. When I'm looking at these levels, I'm looking at them like support and resistance, okay? So here's midnight open. I've already shared my settings in the Trading IQ section, so just jump in there and take a look at it if you have access to the indicator. The other thing I'll also say is the indicator is based off of data. So depending on your trading view plan and how many candlesticks the look back is, might differ from, you know, a basic account to say like a pro or a premium type of account, right? Because I think you get more look back, and that will impact the levels slightly. So I just want to put that out there, okay? But nonetheless, the levels are still pretty good. What I do is I use the hourly time frame. Number one, this is the first step. The second step is I'm identifying how price is reacting to these manipulation and distribution levels. So at midnight open, you could say everything up here is premium, right? That's how I first learned about StatMap. And then everything below here is discount, right? Premium discount, nothing new. But when it comes to trading a continuation, I don't look at it that way. The way I look at it is based off of momentum, okay? So if price is moving into this, say, 1D minus M level and then rejecting, meaning it's closing back inside of this level, like it did here, I'm actually going to be bearish. And I'm going to be looking and anticipating for price to move from here to here. And that's it. That's the goal. That's the target. Okay? I'm playing the high and the low of these ranges, right? So this is a range, this is a range, and this is a range, right? So let's just take this, for example, here, 5 a.m. in the morning, okay? Actually, you know what we'll do? Why don't we look at London with this example, because I think it's a perfect example to use. I did make notes here. London, 6 a.m., London, okay, so let's take a look at London to start, okay? So here is 2 a.m., right here, okay? So what does it mean when we're at 2 a.m.? Based off of how price is moving here, you could identify this and say, because if you look to the left, there's nothing to work with, right? That's what I was saying when it comes to trading a reversal pattern, is that you need liquidity. But if the liquidity is way up here, what are you going to do? Okay, so seeing that price is above midnight open at 2 a.m. and the 1D minus M level is right here, I would be bullish. I'd be looking for a move from here to here. That's it. That's all I'm looking for. That's the objective. So what does that mean? It means now that I have my bias set, I'm being bullish at 2 in the morning, and I'm just going to hit replay and just set this back right here. Okay, so now that I have my bias set, and I'm going to be bullish up until price hits this level, and then we can change the bias based off of how the hourly candle closes, I'm then going to move to the 50-minute. And I'm going to be looking for FVGs, okay? So you can use hourly FVGs, you can use 4-hour FVGs. I don't think you'll really need to use 4-hour FVGs. 15-minute FVGs are going to be pretty much the bread and butter of these things, in my opinion. Sometimes if the 1 hour overlaps the 15-minute, I'll use the hourly FVG and not the 15, because the hourly obviously will hold more weight. So let's just go back to this. Select. Okay, so we'll start right here. So this is the 2 o'clock candle. It closes at 3. We're right here. We're looking for price to go higher. We go to the 15 minute and now the other thing is I'm not looking for, actually that's with the IFVGs. Sorry, one sec. Let me go back to what I was talking about. So here is 245 and I'm looking for price to move into some sort of a FVG or an imbalance, something like that, right? So here is 2 in the morning, right? And we know that 2 o'clock candle ends at 3. So if you show up at 2 in the morning to trade London, okay, you don't have to wait till 3. And why do I say that? Because the candle before, which is the one that ended at 2, is already above midnight open. And it's telling you that it's reaching for 1D minus M once again. So let's go to the 15 minute. Let's go back to 2 in the morning. Let's look for an FVG that correlates with our bullish trend bias. So here's 2 in the morning right here. And as you can see, there's a tail. And guess where it's sweeping into? FVG here. I think there's a volume imbalance here if I'm not mistaken. Yep, right there. Super tight volume imbalance. Okay, and you'll see that there's actually another volume imbalance right here, right? But price doesn't dip into that. So you have these 2 internal range liquidity pools that price is moving into. That is step 2. Identify a 15-minute internal range liquidity pool. The second you've identified that, you immediately go to the 1-minute time frame and you wait. You wait for price to now show us our entry trigger. And our entry trigger is an IFVG, which is similar to obviously the reversal IFVGs, right? So once price moves into this range here, you can see it just cuts like a knife through the 50-minute, and it also moves through the volume imbalance, which I think I already marked. Yep, I did. Okay, so now you get this spike. Now you're starting to see that there's a V-shaped recovery here, right? Okay, so this is now where we're going to talk about the entry function. Okay, so if I go back to the notes, we've determined the bias. We've identified a 15-minute FVG. We have to identify SMT now and how to execute on the IFVG itself. So is there SMT on this trade? I love using these 2 indicators. It's the same indicator. I just put it on twice because the first one is set to ES. If I hit that, it says leave empty when using NQ or ES. So the first one is set to ES and the second one is set to YM. Because sometimes ES won't show us the SMT, but YM will. And YM is much more, I don't know, crazy compared to ES. So you have to be careful, but I'll still use it. So if I hit the ES indicator for the SMT on, you'll notice that nothing is there, right? Now sometimes there's actually SMT and it just doesn't form, right? And remember, with indicators, we use them for efficiency, but we can't rely on them 100%. So you still have to do some sort of due diligence. Now, SMT is not showing there with ES. Turn on the second one, which is for YM. And you'll notice right here, it's now saying there is SMT on YM. So the indicator is showing me SMT. Perfect. That's the third step, right? Done. And you don't even have to go searching for it because an indicator will give you that heads up, right? So the last step is identifying how to execute on that IFVG. Well, if you look on the 1 minute, this is how I start. Even, no different than when I trade reversals on the 1 minute to 3 minute time frame. It's the same thing, same context, right? I'm looking to see which time frame on the lower time frame is going to give me the cleanest IFVG setup. So looking at this, we can see, obviously there's this that we're playing with, right, on the 1 minute time frame. Okay, so I can mark that off. I'm still going to go to the 2 minute though. And when I go to the 2 minute, what you start noticing is a tighter range, right? Probably ends about here. Let me just hit next. Okay, and I'll just go to the 1 minute. Okay. So it'll probably be about here to here. Wait, whoops. right there. Perfect. Right? So that's the 2-minute setup. And then if I go to the 3-minute, it's obviously not going to show us anything. So that's fine. So now what that means is I can either use the 1-minute or the 2-minute to enter this position. Now, when you're trying to figure this out, and like I said, this is where it gets subjective, okay? This is the 2-minute setup. The 1-minute setup is showing that there is an FVG located a little bit higher here, okay? Now, this is something that you're going to have to figure out for yourself in the sense of what you're more comfortable doing. Sometimes this can take you out, meaning you can get a bad entry out of this because the candle might fly. And as we know with IFVGs, they move really, really quick. So, or you can use a 2-minute in this situation. But if you enter here, you're entering where there's a 1-minute FVG. This could still technically reverse. What I like to do is play it safe. Okay? I like to play it safe. And I'm just going to double check. So if I'm playing it safe, I'm going to wait for price to close above this on the 1-minute. Let's just hit next. So you get something like this, okay? So here was the 2-minute setup. Here's the 1-minute setup. The difference is a few points, but you're getting that extra bit of confirmation, right? So let's just move this back up here, and let's put this one back down like this, okay? And your entry would then be right here. Your stop loss would be at the swing point. You can see it's about 29.5 points. And what are we targeting? Well, this is another thing I'm still working on, is trying to decide if 1R is still the way to go. Because when I trade reversal IFVGs, typically 1R is more than enough for me, because often price could reverse on me, right? But when it comes to this type of continuation play, it's not the same. And remember, we're looking at the hourly level per the stat map using the manipulation and the distribution levels as our actual draw and liquidity. That's where we want price to go. So there's a couple ways we can play with this. The first way is you just take a standard 1R. Okay? First way is you take a standard 1R. So here is 1R. Now, what you'll notice, I forgot to mention this part, is based on how you enter, we know the stop loss is now going to, like, our entry is going to change the placement of the stop loss. I always talk about this, right? If we don't have a tighter setup, it does increase our TP distance, and it also increases our stop loss distance. So you see how it's just chopping like this? How you decide to take this trade, if you were to have taken this at London, is up to you. But I believe this still worked out. Yeah, right there. Okay? So at 4 in the morning, this thing finally plays out. Okay? In terms of 1R. Now, if we had used that 2-minute, I just want to compare something here. If we use that 2-minute play, which was this and this, which then means our entry is here, you'll notice that 1R is actually now right there. And I'm just showing you this discrepancy because I noticed it when I was just kind of studying a bit. That slight little difference, that slight little discrepancy between which IFVG level you decided to use was the difference in terms of how long the trade took to play out, right? Because this took 1 hour. But if you had used the higher level, which was literally just like right here, it added an extra hour to the trade before 1R was actually hit, like technically. Okay? Let's just hit next though. And where is it? Boom. There it is. So you see how the drawn liquidity gets taken out? So this is the next thing to talk about. I mentioned you could take 1R, call it a day. I often do this. Another idea is you look for 2R. and call it a day. And align the drawn liquidity, which is the stat map level, with the 2R. Doesn't have to be perfect, but you could go 2R. Now, the third way is, let's say you're skimming profits. So let's say you take 50% off the trade right here, or maybe more, and you're going to take the rest off the trade higher, which means you're holding runners. I'm just putting these ideas out there because it's up to you to figure out what works best for you. It's going to take trial and error, comfortability. Like, are you even capable of being in a trade for 2 hours through this? Right? Like, can you withstand this? Because that's the other thing with this type of setup, this IFVG continuation model. I often show you guys the reversal setups and how they last literally 10 minutes, sometimes 1 minute, sometimes 5 minutes. This type of setup does not take 5 minutes to play out. It can, but on average, this setup is taking much longer to play out, in my opinion. Today, I took that trade, and that first setup, which was the NQ, well, I should say what's funny is that NQ data play took 18 minutes to play out, which is the opposite of what I'm saying. And the actual continuation trade I took today took 7 minutes. But keep in mind, I took off at 1R, right? But often these trades can take longer. Now, the other thing I'll say too is, given that we're in London, or even if you're in Asia, like, it could impact the liquidity, which means the volatility is not there, which might cause time delay of price sorting itself out, whether to TP or to stop loss. But nonetheless, I'm just showing this to you, showing you the mechanics, showing that it's working in London. Okay, let's carry on to the next part. Does anyone have any questions about that? I mean, I think it's pretty straightforward, but does anyone have any questions? All it says, he's absolutely not able to hold that trade. My average trade is around 4 minutes. Yeah, I think we've been very fortunate with those reversal trades when they do appear, because they happen so fast, and being able to make whatever amount that we're making in that time is an absolute blessing. Okay, so let's keep moving forward. So here's 3 a.m., here's 4 a.m., and price is still moving higher from 5 to 6. I don't know how that closes. Closes like this. Okay, so let's keep moving with this example, because I think it's a good lesson. I find that this can work on any time frame. Like, let me rephrase. Not time frame. This can work throughout any sort of time of the day, really. And I've been looking at it, but you have to be very careful, of course, right? Like, you don't want to be trading all day long. You want to have filters set for yourself. Maybe they're the kill zone times. Maybe it's how many trades you take in a day. Maybe it's a dollar amount, right? Like, I will not, lose $500. I will not lose more than $500 in one trading session. Or maybe you're saying, hey, I'm only allowed to take one trade per session, something like that, right? But I just want to show you in terms of the stat map, once again, if we continue the bullish bias up until price hits this level, let's just go back to the 15 for a sec. Because remember, this is a continuation model. That means anytime a 50-minute FVG forms, the potential to take that trade exists up until the drawn liquidity is taken, which is the manipulation level, right? So we identified already here too that there was a setup, and then price moved higher. Now, if we're looking to the left here, there's no FVGs. If we go up higher here, you'll see that it just missed tapping that, and then it created another FVG. Let's go and check that out now, right here. Okay, let's go take a look at this right here. So you can see right here at 4:30, we get a tap into a 50-minute FVG. Let me mark this. I'm also going to just take a quick look at the hourly. Okay, so there wasn't anything there. Let's go to the 1 minute now. Okay, so we said 4:30, right? So that's this area right here. Now, when you're looking at this, we can see that YM has SMT with NQ as price moves into that 50-minute FVG. Okay, so bias, check. Price moving into a 50-minute FVG, check. SMT forming, check. The last thing we need to do, is there an IFVG that we can take? Now, when I trade reversal IFVGs, I've often said I'm looking for 5 points and higher, right? When it comes to this model, the points does not matter. It does not matter. What you're looking for is the most safe IFVG to use. Like I showed you in that last example where we compared the 2-minute versus the 1-minute, and it was pretty close. But depending on your own risk tolerance, you could have taken it on the 2-minute and chanced it to double check and make sure the 1-minute closed. Because if the 1-minute for sure closed a little bit higher, then that 2-minute is perfectly safe. If the 1-minute didn't confirm and rejects, then you know that there's a problem. That didn't obviously happen. But those are the types of things that would run through my head as an IFVG trader. But when I'm looking at this play, and I'm just going to back this up just so we can observe where FVGs are located. Let's do this. So if you do not have an if you do not have an FVG indicator on your chart, I highly recommend for you to put one on. I use fair value gap by Ansh. The reason I say this is that there are FVGs that form sometimes that are so small based off of how we look at a chart. Like if I'm looking at a chart like this, is my eye going to be able to see that there's an FVG here? Probably not, right? And like, if you have bad eyesight, it's going to be even harder. Use the indicator. It will literally like help you. So the second you see price moving into these areas, you already know, hey, there was an FVG here that could turn into an IFVG. Let's hit next. There's the SMT. And then we get a close. Okay? So you get a close right here. And keep in mind, this is the second setup happening in London. This is a continuation play. Let's just take a look at the 2-minute quickly. Because remember, like I said, you want to make sure you're taking the safest IFVG. Okay, so looking at this, you can see that there's a 3-minute up here. But the thing is, it's so high up, you don't want to be waiting to take a trade here, because if you're looking for 1R, you could probably take profit there at 1R. Right? Or skim some profits there, move your stop loss to break even, target 1D minus M, right? I would stick with the 1-minute. So let's just do that. Stop loss at the low. We have a market order entry once we get that confirmation candlestick, right? Here's 1R right here. Let's just see what happens. Boom. Literally hit it in 1 minute and then came back to entry. And then went to the next target, which was the original target in the first place. So you see how we use continuation IFVGs with these types of steps and frame the trade. Once the price moves to that drawn liquidity, that's it. That whole bias of being long is done now. We need to now wait for confirmation on the hourly on how price reacts to this manipulation level. Are we going to be bearish? Are we going to be bullish? Okay, here's 1R. If you were holding off for 2R, like I said, that was another option. That's right here. You'll notice this works quite well. I personally think, whereas I normally would like move stop losses to break even very quickly with my reversal trading, I think with this type of model, you have to have a set and forget approach. Don't take yourself out of the trade unless you're still practicing or worried about your account or whatever. I get it. But I find that like just keeping your stop loss at the low and just letting price run its course is going to put you on the right side of things. And I'm showing this to you here because this is a great example. If you were someone that wanted to take 2R and price is moving and swinging like this, and then you get scared and you take yourself out of the trade, and then guess what? Price goes immediately to TP once the kill zone's over. Do you want that to happen to you? Obviously not, right? What size is that IFVG? Oh, let's take a guess. What do you think? 1 point? Looks pretty small, right? Take a guess. How many points do you think it is without cheating? 2? 0.5. 0.5. See it right there. 0.5. And I'm just showing this to you because it works. And then the other thing too is, if we just consider market structure, support and resistance, is price respecting the IFVG? That 0.5 IFVG is heavily being respected here. Crazy. So the size of the IFVG does not matter. The placement of where that IFVG is located is everything. And it's subjective. Because you are going to see things differently than how I see things. You're only going to get some level of comfort by exposing yourself, gaining the experience, paper trading it until you gain confidence, and then essentially executing with real money. So 2 setups happened during London session today. Using a 15-minute FVG, using higher time frame bias per the stat map. The second I learned how to use the stat map in this way, my entire approach changed, honestly, when it came to these continuation plays. And once again, I will credit Colin Jones, because I learned basically this off him. He's got a video. Just search him on YouTube. You'll see. It's one of the most recent videos he made. It's like, this one level changed the way I trade, or helped me make, X amount of crazy money. Just watch that and you'll get an idea. Of course, it's a YouTube video, so it's going to be super polished. It's not going to be like this, where it's more of a tutorial. And we can obviously flow with our questions and answers. Santa says, sorry for putting it again. Just in case you missed my question, if the trade reached 1R, do you take the trade if you missed it? And it came back to the entry level. So this is the thing. This type of setup is not about, like, did it reach 1R, and if it already reached 1R, I will no longer take the trade. This type of trade is not like that. This is literally a drawn liquidity type of trading setup. It's a continuation based foundational setup, but you are looking for price to move from one side of the stat map manipulation to the other, or manipulation to distribution. It just depends on how price closes on the hourly. So let's move to the next thing. I mean, would you want to still take the entry? The thing we have to remember is, if price hasn't taken the liquidity yet that it's reaching for, and it hasn't invalidated the trade by taking your stop loss level out, then technically the trade is still fair game. Okay? Technically it's fair game. Do we want to enter at the beginning? Of course. But you can still enter later. I mean, I just showed you that last trade where it was just chopping around at entry, like if you missed it. Today I took a trade and I actually missed the entry, but I caught it 2 minutes later because I was talking to someone, and then I came back and I saw it and I was like, oh, you know what? I'll take it, because my entry was a little late, but it was still good enough because it was still pretty much at entry. Okay. So at 5 a.m., the hourly candle now closes at 6 under the manipulation level. What does this mean? It means now that I want to look for price to move lower. It's literally black and white like this, okay? If price had closed above this level, then I would have been looking for prices to move higher, okay? Like, I would have been looking for this to be the target. But at this time, that doesn't happen. Now, keep in mind, it's 6 a.m. We are outside of known kill zones, okay? Just want you to keep that in mind. And it's okay. Let's go to the 15-minute. Remember, that was a 5 to 6? 5 to 6. Okay, so basically what that means is we're looking for 50-minute FVGs to form after 6. Okay, so here's 5:30, here's 5:45, which means this candlestick closes at 6. This FVG is now valid. Let's hit next. Bam. At 6 in the morning, 6 to 6:15 on that 50-minute candlestick, price taps into this bearish level. Now, here's another important lesson I'm going to teach you guys. This is very, very important, and it goes back to what we were talking about in terms of my note here. Understanding how to use various lower time frames to find the best IFVG to use, okay? And we are discussing this London short right here, right? Okay, so let's go to the 1 minute. Let's see what we have. Okay, so this is 6 a.m. right here. Let me put a line. Okay, 6 a.m. is right there. So looking at this does not look very clean, right? We know that there's FVGs here, but it's not super clean, right? You could start moving to the 2 minute. You can see how now it cleans up a bit more. You could go to the 3 minute. You can see that cleans up a lot more. Okay, so let's just use... The thing is, with the 3 minute, you got to wait for prices to close, right? That's the thing that sucks about it. Let's just do this. And you'll notice that there's also a little volume imbalance right here, right? So you might want to do this just to be safe. But now it increases the size of that IFVG, should it confirm. Let's go back to the 2 minute. Notice how the 3 minute confirmation is here. The 2 minute confirmation is here at this level. And then if we go to the 1 minute, the 1 minute is showing the same as the 3 minute. Okay, let's just see what price does. Okay, so it doesn't use this. This is going to happen in real time to you people if you do this. Just because you identify a level does not mean it's going to work. And if it goes higher, you now have to shift and adjust. So this can now be deleted. We don't have to worry about this. Perfect. Now we can look for something cleaner. Sure enough, here is a 1 minute play. Okay, perfect. We have SMT with YM. But remember, we got to still look at other time frames. Let's go to the 2 minute. Aha. Look at the 2 minute. The 2 minute is showing the IFVG size being bigger and actually lower, right? So let's just make a line there, right there, okay? And I'll increase the size in it just so we know where the 2 minute IFVG is. And then let's go to the 3 minute. And you can see with the 3 minute, we don't really need to worry about it because it hasn't confirmed anything. If I hit next, it does confirm here and price ends up going higher. Okay. Okay, so this is the 2 minute setup, which extended a little bit lower. This was the 1 minute. Actually, you know what? I should just leave it like this. And once again, it moves higher, meaning this is now invalidated, right? Okay, so now we got SMT with YM. You got 1 minute FVGs now forming here. Let's just mark that off. I'm just going step by step like this because this is going to happen in real time to anyone trading like this. As you know, like you just have to keep waiting and waiting for confirmations, right? And this is what happens. Now we're able to fast track, but imagine waiting in real time. Keep in mind, we're outside the kill zone too, right? So there's 1 minute. You'll notice there's a little FVG here. That's 2 minute. And 3 minute is way down here, okay? So let's just see what happens. Okay, so this was the 1 minute FVG. That's the 2 minute. And then, of course, we know that the 3 minute was way down there. Now, where was that level? Ah, perfect. This is what I wanted to see, I think. Is it this? Perfect. Okay. Just want to double check. I have so many thoughts running through my head with notes I was taking. I just want to make sure I say the right thing. Okay. Now, if we use the 1 minute time frame, what you'll notice is price closes right here. Okay. We have the SMT. We have the 50-minute FVG. We have the higher time frame bias closing below the 1D manipulation level, telling us to go short, right? Now we have the 1 minute closing here. This is how we have to work in trying to figure out, is the IFVG we're using safe or not safe? So we know this is a 1 minute IFVG. We got it here. It measures to here. But if we go to the 2 minute, look at how this candle closed. Right? And then look at how the next candle closed on the 2 minute. It didn't actually confirm on the 2 minute, even though it confirmed on the 1 minute. Stop loss. That slight attention to detail is the difference between taking this trade and not taking this trade. Taking a stop loss or not taking a stop loss. Okay? And it doesn't even matter that I'm looking at this in hindsight, because I promise you, things like this are going to happen with future price action. You literally have to make sure you're scrolling through the 1, the 2, and the 3 minute. Sometimes you might even need to go in the 5 minute, but ideally the 1 and the 2 are good enough. You want that confirmation. If I know that the 1 minute and the 2 minute have the same IFVG and price is chopping like this, remember we talked about momentum, we talked about reaction. Does this look like good momentum? Or does this look like good momentum? You'd want to use this, right? You'd want to use this. You'd want to see the least amount of candlesticks with the least amount of chop confirming that IFVG. And just by understanding that and taking it with you when you're trying to figure out the IFVG, like I said, is the huge difference in taking these types of unnecessary losses. Okay, so does anyone have any questions about that one? Because that was, to me, that when I started putting this together, I thought that was super, super important to talk about. I just want to put that out there. Sorry, level 10, not to put you on the spot, man. I know we had some conversations. If you have questions that I can't remember what they were, but if you want to ask them in the chat. I hope I covered a lot of the things we talked about, because I did say, hey, I'll try to cover these topics. I think I did, but if I missed anything, just let me know, okay, bro? I mean, that goes for anyone else. If I do have conversations with you through DM, these live streams are here to basically work through those questions, and they obviously, the questions are going to help other people too. Level 10 says, can we go over more specifics on the 1 hour versus the 1:15 4 hour? And you're referring to the stat map, right? Okay. So when it comes to the stat map, I use the hourly. I don't use the 4 hour. Okay. Why don't I use the 4 hour? Because it's just like, remember, if I'm scalping positions on a 1 minute time frame as a continuation play, I don't have time to wait for the 4 hour to close and confirm to give me an answer, right? I would have already missed trades. That's why. By using the hourly, we can capitalize on the momentum faster. Okay? That's why. So the ICT time frame alignment model is 4 hour, 50 minute, 1 minute, right? Or daily, hourly, 5 minute. That's kind of the regurgitated alignments we've always heard. But you gotta think for yourself, right? You don't have to fit yourself into that box. I have tried to show this through my own trading by letting go of a lot of the, more rigid ICT concepts. And I'll give you an example, right? Like, how do I trade reversal IFVGs? Typically, do I look at the 4 hour for bias? Nope. I only look at one level, the daily EQ. Right? That's it. That's all I use to define premium and discount. And if I'm going to go long or short in the day. So just because we have these structured alignments, don't let them chain you into things, because you're going to have to expand your horizons a bit and figure out what really makes sense to you and what doesn't. Because the idea of 4 hour, 50-minute, 1 minute is just a general concept of time frame alignment. And yeah, it can work. Of course, it can work. But the way I'm trading it, I don't need it. I don't need the H4. I only need the hourly. Do you only use EQ with the IFVG? Do you use them with continuations? How does this merge? So you'll notice it's on my chart, but truth be told, in this model, remember, the daily EQ is used as a bias, like is used to form a bias with the reversal trade. So I'm looking for hourly and 4 hour ERLs. That's another thing with reversal trading, because I'm trying to trade extremes of the range. When it comes to continuation model trading, in this way, I don't form my bias with the daily EQ. So I had that on my chart, but I should take it off. I don't want to confuse anyone. The only way I'm forming my bias is through the stat map. Okay? So you have two completely separate models that don't interchange in terms of how they operate. Because if an hourly level is getting swept, I'm not using a continuation-based model to trade. I'm trading off of that hourly level, right? But if there's no hourly levels to work with, now is the time to use the continuation model. That's when I'm going to use this. And that's what I've been trying to figure out, because if price is constantly making new all-time highs, there's no liquidity for me to use unless price dumps like 100 points or more to, like, say, London low. And that's not happening, right? Or if I'm lucky, daily EQ. And that happened the other day, and it took 2 losses. See what I'm saying? So with the discrepancy between ES and NQ today, NQ way above, that distribution level, and ES halfway. Does this influence your decision on bias? No, because I'm only trading NQ. Now, I know you and I talked about ES. I know we talked about ES, and I was showing you that trade setup privately, and I still have it on my screen. Trump started speaking about here. I can delete that, but this is what you're talking about, right? So right about here is where price starts to close above the distribution level, right? But you can see right here, ES is still working its way to that distribution level. Does this impact how I trade? Once again, no. Why? Because I don't trade ES. I'm trading NQ. I only care what NQ is doing. Yeah, I will use ES to gauge specific levels and alignments. And when I'm trading the reversal idea, of course, we talked about the daily EQ, right? We want to see price correlated with the daily EQ. But when it comes to the continuation idea and the setup, it's completely different. I don't care about the daily EQ. I don't actually even care what ES is doing, unless it's forming SMT. That's the only time I care about it. Okay? Hope that helps you, brother. Let's go back to this. So this is now 6 to 7. And we get a close like that, and then we get a close like this. So this candlestick right here is 6 to 7. Let's just take a look at what happens after 7. So this is 7 o'clock right here, and that's 7 right here. And what you'll notice is, even though price closed technically, so this is right here, right? This the 6 to 7 hourly candlestick closed right here. Let's mark that FVG again. So 6 to 7, and I'm really nitpicking here at going short here, but just bear with me for a sec. So 6 to 7, that's right here. You really don't have any bearish FVGs to work with at this point, right? See that right there? Doesn't confirm it, right? And no SMT. So even if I wanted to be bearish and squeeze out another trade, because this candlestick closed below the daily manipulation, we don't get a setup. Okay? And then when that happens, you got to wait. So you have to wait now for a price to show its hand. What does that mean? You got to wait another hour. So this is 7 to 8, right? So at 8 o'clock now, price closes above the manipulation level. What does that mean? It now means we can look for bullish continuation price action higher, like I said earlier. If we close below here, I'm looking for shorts. If we start closing above this level and accepting above it, I want to go higher now. Okay, so let's go to the 15-minute. I mean, we can keep analyzing this to death. So this is 7 to 8. So you're looking for a 15-minute FVG at 8 o'clock or post 8 o'clock. Okay, so that's like right here. That's 8:15, right? So let's just take a look. So you have a 15-minute bullish FVG right there. I don't think there's anything on the hourly. No. So here's 8 a.m. Here's 8:15, right? The FVG confirms on the 7:45 to 8 a.m. candlestick. Price dips into the 15-minute FVG. Let's go to the 1 minute. Okay, so right here, right, we said after 8 a.m., right? So you can see that there is a IFVG here. But there's no SMT showing. And remember, SMT is part of the rationale of taking the trade, right? So now it's flexing this weird SMT here. If you choose to take it, you choose to take it, right? If you're basing it off that decision. But remember, keep looking at higher time frame levels with the FVGs to determine if it's a valid one to take or not. And remember, nothing is perfect, right? So even if you did take this because you're like, hey, well, there is YM SMT, it's pretty gross, right? It's not like a clean SMT, but let's just say you're going off those mechanics. Your entry would be like this, stop loss there. You could probably target the top. But that would have hit stop loss. And that's okay because we already know nothing is 100%. So I'm showing you losses too here, right? Like, I didn't even know that was there, but it's still a loss. That's fine. It's going to happen. So you stick with it because the level's not been lost yet. Is there anything else we can work with? I'm not sure. Let's find out. So now we got a cleaner SMT. Starting to get some price delivery. Let's go to the 2 minute. If we go to the 2 minute, we can see that there's a nice clean FVG right here. And you can see price closes above it, right? So entry. And look at that. Look at how fast that was. So even though you may have taken a loss on that first setup, following the rules, you make it back on the second setup. And remember, I'm just going to show you something because this was the start of a monster move. Remember the target was the distribution level? 17R move. 17R move. Just by following everything I just talked to you about, mechanically speaking, the only subjective part is understanding how to figure out the IFVG. You're playing liquidity. You're playing liquidity. That's it. Okay, now, yeah, this went to stop loss here, and then it went to liquidity, right? Now, I'm just going to preface this by saying no one is holding this position for 17R. I don't care who you are. Even if you were, you would have probably put your stop loss to break even here, and you would have got stopped out, right? Like, let's not fool each other. Okay, let's not fool each other. But, where did price deliver to? The draw on liquidity. We talked about this. And I said, if price on the hourly closes above that manipulation level, I am now targeting the distribution, and it moves up there. Okay? Does that make sense, guys? I hope it makes sense, because I think this is a cheat code of cheat codes. I don't think I've seen a cheat code this good in a long time. And it's very simple. Very simple. So let's just go to market open now. Also, just want to take a second and say thank you guys for all being here. I really appreciate your time. Thanks for hanging out with me on a Friday afternoon. I love talking about charts. I love it. It's a passion of mine. I could go on forever. If anyone ever wants to have a conversation with me about charts, we can definitely do that. It's not a problem. If you guys want to even have an open discussion in the public Discord, like through the study hall area, like I'm always down for that, time permitting. Appreciate you, Xanu. Appreciate you. Okay, so let's just take a quick peek at pre-market, right? So at 8 to 9, we close above here. What's it looking like after 9? Because remember, we had all that news, right? So 9 o'clock puts us right here, close above. We're looking for bullish price action, which means if we wanted to find some sort of a continuation play with that idea, we'd need to see at minimum a 15-minute FVG tagged into. But as you can see, we don't have anything here, right? I have the indicator on. There's nothing. There's no FVGs. There's not even an hourly liquidity level to use. So when I was looking to trade this morning with the reversal idea, well, it was just this level. This is it. This is all I had. That's it. And this was that H1 buy side liquidity level, previous daily high. This is where we caught that short with the data candle, right? That's it. That's all I could do in terms of the reversal play. So this is where now we work with continuation. Okay, now I'm going to keep going with this because I think this has been a healthy conversation. At 9 a.m., price closes like this. Okay, now the way I learned this from Colin, and this is where, like I said, you as a trader have to figure out the risk you want to take. You don't have to emulate the people you learn from, myself included. Figure out what works best for you and then develop some sort of A+ strategy around it. Seeing that price closed above the distribution level here at 10 a.m. just tells me that price is going higher. And truth be told, it's not rocket science because the price just keeps going higher every single day, making new all-time highs. So it's no surprise. It's not like it's not a genius type of idea here. Now, what you can do with the stat map, and I learned this through another trader named It's Algo, is using these ranges and mirroring them. Okay, so what does that mean? It means if I take the midnight level, which is our EQ, and I mirror it, I can now start creating levels of interest for myself. Okay, so that's using the 50% level. Okay, and then if I use this distribution level here to this level, I can now create another level of interest separate from the other level that I use. And what I'll do is I'll make this one like this. Okay, and I'll just take off the stat map for 1 second. So we have these two levels here now, and I just want to see what happens because I actually don't know. But this is a good little trick you can use with the stat map to create extensions when there's nothing to use. Okay. Tracy says, I sometimes open another stat map starting just before the current one ends. If you extend it, you can see if levels are higher or lower, indicating if the next session. Yeah, exactly. You know, I noticed its algo he doesn't post as much as he used to. But he used to use different time frames so that you would get like different levels, and he would kind of work off those. To me, while obviously that's a smart way to go about it, it just clogged up my screen too much. So, and the thing too is, ideally, if price is already moving beyond, like way beyond the distribution, whether on the bullish or the bearish side, typically you probably want to just stay away now. Like the trades are pretty much done because price has really expanded in terms of data, right? Because the stat map's based off of data of open, high, low, close. It's already moved a pretty decent range. Now, can it go even further? Of course, like anything's possible, but you just have to understand you're taking on added risk. So the stacking idea, like, I personally don't use previous sessions, but you're right. Like after the session's over at midnight, the new stat map is going to get formed, and we can also look to the previous stat map to see if there was a higher level and things like that. You could do that for sure. I mean, if it works, it works, right? I mean, that's what this whole thing's about, is trial and error, experimentation. So right now you can see price is starting to slow down right at this level. Right? Interesting that it's slowing down at that level. Where was that level? That level was the manipulation to distribution mirror, not the 50% mirror that I had shown. So I can get rid of that for a sec because we're slowing down here. Now I just want to focus on this candlestick again, okay? 9 to 10 a.m. this candle closes. Now you'll notice, and you'll recall, I took that long, right, on NQ. This is how I did it. 9 to 10 closes bullish above here. I'm still looking for bullish continuation. Okay, what does that mean? I need to see a 15-minute or hourly FVG get tagged after 10 a.m. So here's 10 a.m. and it confirms this FVG here on the 15. Okay? You'll notice this candlestick at 10:30 literally just taps the lip of that FVG. Now, if I go to the hourly, you'll notice that the hourly, which was way down here, doesn't confirm until 11, right? When this candle confirms. So can't really use this. This is just, it's not confirmed yet, right? That doesn't exist. Whereas this one is confirmed based off of the way the 10 to 10:15 candle worked. Okay, so now we're going to focus on this 10:30 to 10:45 candlestick. Because remember, step one was identifying the bias with the stat map. It closed above on the hourly, I'm bullish. Step two, is there a 15-minute bullish FVG identified after 10 a.m.? Yes, there is. Okay, step three, is there SMT starting to form on the price? Let's just backtrack like this. And yes, there is. Here's the SMT with YM. Okay? Now you'll see all these FVGs here, but you can see price creates the actual SMT on this candlestick. So what does that mean? It means here is my FVG. Here's my entry. You can obviously look at 2 minutes, right? There's a 2-minute level up here. Truth be told, I was looking at this level too, but I felt like this was a pretty good distance and a good risk to take. Boom, 1R. Actually, more than 1R. That's 1.69. I actually closed mine early. I closed mine early, I'm not going to lie. And I just want to show this to you because I did share this trade. I already showed you where the liquidity, well, I showed you guys where the liquidity is right now. Let's just hit next. And keep in mind, like, whether you take 1R, 2R, skim profits along the way, like, there's no, like, perfect way to go about this because we never know 100% what price is going to do, right? And I'm just letting this run out because I had already showed you how I identified this level. And you can see price literally reaching towards it, some profit being taken early here. Maybe there's some 50-minute FVGs here. I don't know. Let's see. Because if there is, there could be another setup there that I didn't know about. So let me just hit back here. Thanks, Jackbit. I appreciate the kind words there. Okay, so way up here we got a 50-minute FVG. Let's just see what happened here, because I have no idea. This is happening while we're on live stream, I believe. Now, we are very, very extended. So I noticed this. Is there an SMT there? So you have SMT here. You have this candle closing here. Is it a risky long to take? Aiming for price to just move to the top of the range again? Let's take a look at the 2-minute. Ah, 2-minute. 2-minute, 2-minute, 2-minute. See that 2-minute there? Me personally, given how high price is in that range, and we're of course in no man's land, price discovery, if you will, I don't think I would have taken this here, even though it confirmed. That would have been a stop loss. You can see right here is it rejects right off this FVG, right? So I'm saying you gotta start understanding which FVGs you need to use, which are the safest ones to use, and when to be a little bit more risky. Is it worth it to be risky this high up in the range? No. Was it risky to take that setup way down here, given that there was a higher FVG? Yeah, it was, because we were inside of a proper kill zone with volatility, liquidity injection, right? Price was really expanding. We just got that closure above the the distribution level. That's where you want to start taking more risk, right? You don't want to take risks outside of a session. And it's just a probability game. But I will say, if I look at the 2-minute, I do like this way better. 3-minute, same thing. So for me, I think, to me, this would have been a safer play, is waiting for this. And why? Because you would have been looking for a move like this, maybe up here, and, you know, based off how price is moving, your stop loss could be, you know, like something like this. But you can see how 1R makes a little bit more sense here as well. And it would be showing aggressive price action because we'd be taking out all the liquidity here and then moving higher, right? So you'd be kind of catching like a breakout style IFVG. But this is another continuation play, right? But you can see the rejection, right? So that keeps you safe. So does anyone have any questions on the tutorial today? If not, that's cool. If not, that's cool. And keep in mind, this level, even though I marked it, it's not a like. It's not like a hardened stone type level, right? Like this level right here is rock solid. This level right here is not rock solid. This is a projection level, meaning I don't know if that's going to even make sense. It's just a projection. I just mirrored a range. Whereas this is a hard-coded level based off of the stat map. I would put way more trust in this than I would in this. And then trying to long up here is already risky as can be. Because if we look at the expansion from market open. So let's go to the low, to the high. This thing is already up 758 points. Do you want to be longing when prices already moved 758 points? Definitely not, right? Yeah. So you got to have logic with how you trade to tame the FOMO. You don't have to be in every single trade. When you're analyzing like what we just did right now, we're just looking at levels and kind of back testing, forward testing things a little bit. That's a different story, right? But I hope you guys pick something up today. There was an Asia session long from last night too, but I'll leave that for another day. I think that was a pretty textbook setup too. But yeah, that's how I'm doing continuations. That's how I'm doing them. And I think, given the way the market has been playing out, I mean, these continuation IFVGs have been rock solid. So, alrighty, well, that's all I got for you guys today. I was gonna do some other things like I normally do, but it's already 2:41 in the afternoon, and I gotta bounce. So we will skip the market review today. I'll be back on Monday, 1 p.m. Eastern time, for another live stream. And I can definitely go over more of the market on Monday. And I'll definitely be looking to see how price opens on Sunday. So I appreciate you guys. Thanks, Zanu. Bobby, thank you so much. Good to see you. It's almost 8 p.m. in Portugal. Nice. I have a friend that lives in Portugal. Really beautiful out there, actually. Nuno, thank you too. Appreciate you, man. Jackbit, appreciate you. Level 10, respect. Tracy, appreciate you too. Thank you so much. I definitely need to go on an island and start dreaming. Definitely. I keep wondering when summer or warm weather is going to be happening where I live in Toronto in Canada. But it's like, I woke up today, I mean, we're at May 8th, and I woke up this morning, and there's ice on my windshield. I'm going to drop my daughter to school, and there's ice on the windshield. I couldn't believe it. It's like, why is there ice on my car? And it's May 8th. Exactly. Happy Mother's Day. Definitely didn't want to forget about that. Thanks for the reminder, Jackbit. Happy Mother's Day to your mothers or your spouses. If you have kids. Alrighty. Thanks again for your time. Peace out. God bless you guys.